The SA Reserve Bank is expected to increase the repo rate later today. The question, of course, is going to be, is it 25 basis points or is it 50 basis points? Econometrix Chief Economist, Dr. Azar Jammine, joining us this morning to try and preview for us. And, Doctor, hello to you. And you did call this last time you and I spoke a couple of weeks ago because you were talking about what's happening over in the US, their fears of their interest rate hikes. Then we have the rand-dollar issue here as well. And I think you've nailed it on the head. The question is it 25 or is it 50? Good morning.
Good morning to you, Gareth. It's unlikely to be 50. And the reason I say this is because we've already had the indications from global central banks that they are unlikely to go as far as 50. Last week, we saw no fewer than 4 leading central banks, those of the United States, the UK, Switzerland and Norway, all increasing by 25 basis points. And the reason why they are reluctant to become more aggressive is because of the fear of a burgeoning banking crisis if they increase interest rates too far. Yes, they are concerned about inflation potentially increasing too rapidly or not coming down as fast as they might have hoped. And to that end, are going to be keen to raise interest rates in the first instance, but they are aware that the collapse of the SVB bank in the US and a couple of other smaller banks was attributable to the fact that short-term interest rates had risen so steeply over the past year that the cost of funding longer-term loans by these banks has risen to such an extent that they're borrowing at very high short-term rates and lending money out at significantly lower rates and therefore losing a lot of money. And to now force them to have to pay another 50 basis points on their short-term loans could precipitate a much more serious banking crisis, which could end up being far more serious for the outlook for the world economy than the higher inflation rate might result in.
What is that going to do? How much of a buffer are we going to then have against inflation, domestic inflation, Doctor? Because obviously that's what all of this is in aid of, trying to keep our inflation rate down, because the argument will be if we were to hit it with 50 basis points, our control over the inflation will be far more relevant than just doing it at 25 basis points. At 25 basis points, there's an expectation they may have to do it again later to keep inflation. Why not just hit us with a big stick now and we can absorb the hurt?
Firstly, the South African economy is a lot weaker than most of the economies that I was referring to, who got a 25 basis point increase last week. Secondly, our interest rates are already substantially higher than our inflation rate. The repo rate's already at 7.25%, and yet our inflation rate is 7%. In the United States, for instance, the Fed funds rate is now at 4.75% to 5%, and yet their inflation rate is higher at 6%. So you can see a difference. Our real interest rates are already significantly higher than they are overseas. And the Reserve Bank is also aware that a lot of our inflationary pressures are attributable more to the fact that we have substantial administered prices from government agencies that we have very little control over. We know that we're going to have a substantial increase in electricity tariffs. Raising interest rates to combat that is really not going to achieve all that much.
No, it's not. Can we bring it back home for viewers joining us this morning, Doctor, if you don't mind? What is the expectation, as you're suggesting, 25 basis points in this case? What is that really going to mean for those of us who owe money on our cars? Perhaps we have a property that we've just bought a short while ago. How much financial damage per month do you think we could be looking at? Is there space for the banks to go, you know what, we really like you, we're not going to increase your interest rates? I don't see them doing that. So what's the hurt going to look like?
No, I don't think banks are inclined to do that. The hurt is significant, but, it's part of a cumulative process that we've seen over the last, as you said, from November 2021. At the same time, one has to recognize that the prime overdraft rate, which will rise to 11%, will still be substantially lower than it has been for most of the past 20, 30 years. So to that extent, consumers are going to be getting away with a lower interest rate than has been the case for many years. In the past, your repo rate, as much as I've been saying that our interest rates are relatively high compared with our inflation rate in comparison with other countries, the fact is that in the past, our interest rates were not 1 or 0.5% higher than inflation, but 5-6% higher than inflation. So to that extent, consumers are still getting away relatively lightly with interest rates a little lower than they might have been in the past with an inflation rate as high as we've got it right now.
Let me ask you this before I say goodbye to you, Doctor. Is there any good news? Could we have hit the ceiling here for the basis points increase, or could we get smacked again perhaps in the next few months later in the year? What's your prediction, or your hope at least?
Unfortunately, I don't think it's a done deal that we've reached the peak. I think there is a chance that we might still see another rate hike in May. A lot will depend on the outcomes of the international banking crisis. In the last few days, it seems to have calmed down a bit, and markets overseas have become a little more optimistic again. And if that continues, then internationally there might be an inclination to carry on raising rates a little further. And if that is the case, we may not have seen the top of our interest rate cycle. But having said that, there is a good chance that today's rate hike might turn out to be the last. But we said that in January.
We did.
And I'm reluctant to be firm on that now on this occasion either. But come what may, I don't think we're going to go higher beyond May. In other words, we may possibly get another 0.25% hike in May, and that'll be it.
Come what may in May, and hopefully it won't be the case when we get there. Chief Economist for Econometrix, Dr. Azar Jammine, always a pleasure having the good docs on, explaining just so very nicely why it's happening and what the impact is for us here. So hopefully we're at the top of the peak, but we might not be. You heard the doctor talking about, of course, the global impact on our local markets, and the JSE steadying off the back of that news coming out of the United States and how they're handling their inflation and their interest rates. So how are we having a knock-on effect here? Relatively stable. Let's see if you've made or lost money at 7:30 this morning.